Microsoft is a technology company that is a part of the big tech group, which consists of Facebook, Apple, Microsoft, Google, and Amazon. Microsoft dominates in the desktop operating system market share, as well as having a significant role in office productivity, software, cloud computing, and in the video game industry. It was founded in 1975 by Bill Gates and Paul Allen, and the focus was to produce microprocessors and develop software primarily for the Altair 8800. Since then, Microsoft has transitioned from its focus to cloud computing and diversified its products and has a broad market within its industry. And our presentation will consist of these main areas where we based our work on. Now, during the Trump presidency, we experienced hostility towards big tech, of which Microsoft is a big part in. There were threats of regulations and laws that would prohibit and would complicate their business, so they could not have as much power as they currently have. Both the US and EU have voiced their concern about the issue and wanted the companies to be more regulated, as well as possibly broken down. For example, there has been a 16-month-long investigation into big tech, which concluded that big tech has monopoly power and even has weakened democracy. This is a great concern because regulations can most certainly disrupt the businesses, but one company that was not investigated and was not once mentioned in the report was Microsoft. While the threat of regulation towards big tech are looming, Microsoft does not need to worry as they are in the dark and not the main target. And as you can see on the chart, all of Microsoft markets have seen an increase in revenue, which means that the company is healthily growing and expanding. Its fastest growing market is within the server and cloud services. That has seen an exponential growth compared to the other markets, which are experiencing linear growth for the most part. And with all the services combined, Microsoft has generated approximately 143.1 billion in 2020. And fun fact, Microsoft cash on hand is also 140 billion as of right now. Microsoft's most revenue generating market currently is within the server products and cloud services, as mentioned. Microsoft supplies the cloud computing service Microsoft Azure. And right now, Azure is in a constant fight for first place with Amazon Web, with the service growing exponentially. Within the market, Microsoft also provides server operating systems, the Windows Server, as well as programming tools such as Visual Studio. All three are leading in their markets. Microsoft's second most revenue generating market is its Office product. Microsoft is contending with Google and their similar products, but Microsoft has more of a focus on providing its software to companies, whereas Google is more individual focused. The Office package has since been almost mandatory for serious businesses to use. Microsoft's third most revenue generating market is also its oldest and most known, Windows. Microsoft is famous for its Windows OS, and rightly so, as it has always or almost always retained a 80% PC market share of their operating system. Its closest contender is Apple and Mac OS and Linux, but Microsoft still dominates this market. Other revenue generating markets are Microsoft's gaming department. Microsoft has expanded its game market share by acquiring companies and by having their own console, recently launching the new Xbox, which is sold out pretty much everywhere. The acquired companies are Bethesda, which make Skyrim and Fallout, and the Swedish Mojang, which has made Minecraft, which is the best-selling video game of all time. Both are one of the biggest in the industry. And now coming up, Milan will take over.
Yeah, so I'll talk about the key markets and business segments firstly. And as Sanel has already said, they report in three main areas. So productivity and business processes, which is your traditional Office suite and LinkedIn, etc. Then cloud services, which is like the strong growth arm. And more personal computing, which includes the physical devices like Surface, the gaming arm, but also the search engine. As you can see on the bottom left, productivity and business processes, as well as intelligent cloud, has really been where the growth in recent years has come from. But on the bottom right, you can see that the revenue distribution among the three segments is quite equal. So Microsoft is very well diversified when it comes to the revenue generation. If we go to the next slide, we can see that the ownership structure of Microsoft includes 71% is held by institutional investors. That's incredibly high. That's one of the highest of the blue chips. And most of them are mutual fund holders. This can have a risk attached to it as well, because most of these invest alongside their investment principles. So if those change or Microsoft doesn't make the threshold anymore, there could be like short to mid-term impact on the share price. However, due to the long-lasting relationships between those like large investors and Microsoft, we expect this to be quite unlikely. Observations from insider trading, nothing really to discuss here. There hasn't really been an increase year to date, which would be an indicator for a bubble in the share price, but we haven't found anything that would support this claim. If you go on, we can see on the next slide the competition. Obviously, Microsoft is a huge company, and the competition tech in general is fierce, but also due to the fact that Microsoft is active in so many different segments and across physical, but also software products and cloud. Obviously, there's an immense amount of competition in the market as well. I focused on the bottom right side on the analysis of the cloud computing market share, and we can see that Microsoft has done a tremendous job over the last couple of years to increase their market share relative to where they stood before, and that also very much reflects on the strategy Microsoft is pursuing over the coming years. So probably most of the growth in coming years will come from cloud, where I will come to in the next slide as well. So if you can change to my last, oh yeah, that's also going back to the competition bit, that Microsoft is very well diversified. You can see that, for example, the other extreme would be Facebook, which generates like 99% of their revenue from ads. So even if there is regulation incoming and it targets privacy and data protection, it's likely that other competitors will be hit differently or more than Microsoft, which kind of reflects back onto what Sanel has said before. So if we change to the next slide, we can see that the opportunities and challenges for Microsoft are on one hand, obviously regulation. Sanel has touched on this already in the European Union and the US. However, as said before, we think that Microsoft will be less severely hit by impeding incoming regulation than, for example, their competitors like Amazon and Facebook. But they obviously have been in the news lately as well with anti-competitive laws, because they have quite strong market power in some of the markets they operate in. When it comes to macro issues, of course, there's still the pandemic ongoing, and stalling economic growth due to COVID-19 could cause decreasing tech spending, especially among smaller and medium enterprises. But since most of the software that or Microsoft's product that are used by SMEs, because they're mostly business critical, we don't see a steep decline there either, and that's also kind of what the report suggests by Microsoft, obviously themselves. So there's not really a big issue here, but it's still uncertain where this goes. And when it comes to cloud computing, we've talked about this before. Azure is very strongly growing, and they were just awarded a multi-billion-dollar Pentagon deal, This reflects obviously very well on Microsoft, because they have the opportunity to secure those governmental contracts as well, which tend to be quite large in volume, but also for quite a substantial amount of time. And one can only infer from this then that maybe in the future, if there's another government contract and all the government employees already operate on Windows systems or on Microsoft cloud systems, they're likely to renew those contracts. And that was also challenged in court by Amazon. So obviously Microsoft is a very strong competition there, but the courts have also ruled in favor of Microsoft lately. That was in end of September, I think. So yeah, I'll hand it over to Mikael now.
Okay, as Milan said, since Microsoft have so many competitors and have so diversified business, there are many companies to compare them with. But I have chosen to compare with Apple, since it's one of Microsoft's longtime competitor. I have picked out a few ratios that I think stand out a bit. So as you can see in the picture to the right here, Microsoft's PE and EV to EBIT is valued a bit higher than Apple, but as of today, I think they are almost the same. And other companies like Amazon and Adobe has like a PE over 60, so it's nothing really to be afraid of. And for the last 4 years, Microsoft's debt to equity has been decreasing, mostly due to the increase in equity. This also shows in their cash account, which has been over 130 billion for the last 4 years, and steadily increasing. And this indicates that it's a stable and good business that's growing. And besides the increase in equity, Microsoft also has increased its dividends since 2004, and also had made a stock repurchase during this time. They currently have a stock repurchase program with no expiration date. So yeah, the next slide, please. So for the company performance, Microsoft has positive trends for revenue and net earning, which also boosts their net profit margin. So they now have close to half of Apple's revenue with almost the same net earnings. This has granted Microsoft a profit margin just over 30% in the last 2 years. Microsoft is also a historically great company with increasing sales of an annual compound rate of 22% for the last 33 years. Next slide, please. Now to the tricky part. Yeah, my experience of technical analysis is not that great, so I will give some recommendation based on other analysis and the Fear and Greed Index. So CNN Business has polled 31 investment analysts, and among them there are 27 buy recommendations, 2 outperform recommendations, and 2 hold recommendations. So you could say that all the analysts agree that Microsoft is a strong buy right now. Historically, Microsoft's strongest quarter is the second and the fourth quarter, which would indicate that it's time to buy soon. However, the Fear and Greed Index points towards a market decline in the near future, since it's almost at the top right now. So we recommend that to hold off a bit and wait for a decline in the market to purchase the stock right before the next quarter. Yeah. So yeah, a strong buy for Microsoft. So now to the conclusion with Sanal.
Yes. So we can conclusively say that Microsoft is here to stay due to being able to both adapt to changing markets, industries, and as well as innovating on their own behalf. Microsoft has decreased their debt, raising revenues, and becoming one of the market leaders wherever they decide to expand. To summarize, Microsoft has an extreme robust business model because many businesses rely on their products. And Microsoft also belongs to the heavily scrutinized big tech group that is seeing hostility towards them, allegedly having monopolistic powers. The US and EU wants big tech regulated. However, Microsoft is not mentioned when there are talks of regulations and such. As CNN has stated, investors should not be nervous. And the new Microsoft has seen tremendous growth in revenue and earnings, and is establishing itself as a cloud computing company, as well as diversifying into other successful ventures. Since Microsoft is very early with cloud computing, with only a few contenders, it is safe to expect that their new cash cow will continue being lucrative. And we in the group find Microsoft to be a secure pick, which makes it a perfect as a foundation in our new portfolio. If history repeats itself, we can see Microsoft's stock price rise to new all-time highs. So, as many other more established analysts agree on, Microsoft is a buy.